Once a developed G3 euro, yen, or dollar hyperinflates, I think it's game over. That everyone around the world looks and says, the only currency that's holding its value is Bitcoin. It's not just writing on the wall. It's the fait accompli, and that it domino effects. There's a greater preponderance of those people in that next layer, the people who are Bitcoiners, who understand Bitcoin, but their business is not Bitcoin centric, that are interested in accepting Bitcoin payment. All these Bitcoiners were out there saying, this is because of the money printing, the Fed's gonna have to print a lot more money. And so kind of a combination of those two things is like, people don't unlearn Bitcoin. It still hits you every time you see just how expensive life is getting in fiat terms. And that's the currency failing. We wanna be able to deliver a solution for people that value Bitcoin, that are down the rabbit hole. But as part of that, to grow the market organically, to grow the universe of people that say, yes, I want to accept it.
Then, hi, Park. How are you doing? Everything fine on your end?
Everything's good on my end. Excited to be on today and to rejoin the podcast.
Absolutely. And I just told you this after recording, but I just want to tell this also to you because I'm really thankful what you're providing with Saprite. We with Microseed, we had a problem a lot with Squarespace, with they are holding revenue from us that they shouldn't hold, that the payments are failing left and right. And it might be a sad statement, but like we found the solution with Cyberset as an alternative, and it just works, and that's why it's so good. It's like just that it works is just an amazing feature for us because we just get paid, and it's like Bitcoin is possible, Apple Pay is possible, card payments is possible, and it's just like it's great. So I just wanted to get that out of the way without any affiliation, but I just love the product. So thank you so much for that.
Well, one, appreciate you saying that. Appreciate you guys being on the platform. Really, your business is the exact type of business that we want to support. The idea behind Zaprite is making it easy to accept both Bitcoin and fiat side by side in one integrated checkout to make not only the Bitcoin experience great, but the fiat experience great. And ultimately, our goal is to help drive Bitcoin sales, but not at the expense of fiat, which is still a primary rail. And so both need to work well. And at the same time, we're also building for Bitcoiners, people that value Bitcoin and recognizing what their needs are. That oftentimes if fiat is a friction point because of how somebody wants to accept Bitcoin, then they just won't accept Bitcoin. And so, but I think what you mentioned is both need to work really well, and both work really well with Zaprite. And so the best compliment we can get is that it just works, and it works well. And also, the other great thing is you guys were able to set yourselves up entirely. Kind of being able to plug in your rails. We didn't know that you were on the platform until the SAT started streaming, and that you sent that tweet out or the post on X. So that's also just a testament that it was easy to set up, easy to connect, and easy to connect to your website. So we're excited to have you guys on the platform, and looking forward to helping you guys grow, and not only making your fiat rails easier, but also to help drive sats flow directly to you guys.
And I love that because there is sometimes this annoying theme in Bitcoin where we say, it has to be only Bitcoin and we have to ban all the fiat payments. So like you as separate, you could also say, we only do Bitcoin and we don't care about fiat. You could take that stance. And I think it's a very reality driven and realistic driven approach, because like with Microseed, we are doing the self-custody hardware metal stamping. So this is kind of the end of the self-custody rail. Like you buy, first you have to take self-custody, then you have to get the hardware wallet, and Microseed is at the very end of that. So we cater to very do Bitcoiners that are far down the rabbit hole when it comes to self-custody already, and they're doing it themselves. So seeing them still using mostly fiat to pay is just showing the reality that Bitcoin right now is mostly used as a store of value. And a lot of people already want to use it as a medium of exchange. We have a good amount of payments. I don't know the exact numbers now, but we have a good amount of people that pay in Bitcoin, and I pay in Bitcoin. My freelancers, I get most of my income in Bitcoin, but most people just want to store their Bitcoin as store of value. So I love that you're also kind of doing the reality check of, hey, there's also fiat payments, and Bitcoiners, real Bitcoiners, want to pay in fiat and don't want to touch their Bitcoin stack right now.
Yeah, I mean, our goal is, again, I don't know if you guys utilize these tools. I'm trying to remember. You might have mentioned it in your post, but it's the recognition that both are necessary. Now, there are certain businesses that only want to accept Bitcoin, and more power to those businesses. But that for most businesses, the thing that will enable not just their ability to accept Bitcoin, but also their ability to then have the follow through of be paid in Bitcoin is to deliver a great payment experience in Bitcoin that is side by side with fiat. That every time somebody gets to a point of checking out, they can see Bitcoin on a level playing field with fiat. And then we put tools in your hands. And again, this is where I don't know if you guys are utilizing it to say put a fiat premium or to put a discount on Bitcoin, but to do that in a way that doesn't disrupt the experience, that communicates the trade-off. Like if you put a premium on fiat or a discount on Bitcoin, it actually communicates to you, hey, this is how much more it costs before you actually go through the payment method. And it's done in a light way, only at the option of the customer. If the customer doesn't want to introduce that, it doesn't exist. It's not forced on anyone. But if they do, then you don't have to have a conversation with your customers. Both Bitcoin and fiat are there, and you have a way to communicate what your economic preference is, and that you'll accept both and what the trade-offs are. And everything is designed ultimately to drive the Bitcoin payments, but not in a way that degrades the fiat experience at all, but levels it up. So, and y'all's use case is a perfect example of it, because, our philosophy is we want to be able to deliver a solution for people that value Bitcoin, that are down the rabbit hole, but as part of that, to grow the market organically, to grow the universe of people that say, yes, I want to accept it. And part of that solving for that box is meeting businesses where they are. And recognizing that most businesses, when they start accepting fiat, and businesses differ in range, and yours might skew more toward more Bitcoin payments just because in terms of a percentage, because it's a hardware recovery. But for a lot of businesses, it might be 2% of their sales in Bitcoin or 5%, but the business owner knows the importance of Bitcoin. And if that's the case, if they're starting out with their sales being something like 2% or 5% in Bitcoin, but they know it's going to grow to 10% or 20%, they can't sacrifice the fiat experience or the fiat customer base in order to enable Bitcoin if it degrades that, if it creates friction. So we think about all those things and then try to deliver the solution. We legitimately try to be better at fiat than fiat, and through that mechanism drive Bitcoin sales.
I literally told you that before, that we had fiat rails, like the older website that's literally right now no longer available, was you have the choice of buying with fiat or buying with Bitcoin, and buying with Bitcoin was the SAP, buying with fiat was the Squarespace thing. And we had so many customers complaining that, like, oh, this buying with fiat doesn't work. The card doesn't work from Squarespace. And you're like, hey, try the same card with SAP, and they're like, hey, it worked. So you're actually doing a better job in fiat than the traditional fiat rails.
Yeah, and that's genuinely our goal, and I think that's something that some people might experience on a day-to-day basis. There's a certain segment of the fiat world that has upgraded their own rails. There is a lot of the legacy fiat world that has very outdated payment flows and a lot of friction that exists, and that ultimately leads in fallout and a failure to convert sales too. And so, there's a number of businesses that we're talking to right now that are certainly interested in enabling Bitcoin, but also a principal reason why they're talking to us is because the legacy way that they receive fiat is so outdated, and we can help update that at the same time that they enable Bitcoin payments. So it's an equal priority for us.
Absolutely, really cool. And in our first episode that we did together about I think 10 months or something like a little bit less than a year ago, we covered the talk about gradually then suddenly a lot that you, I think, popularized within Bitcoin. And the last 10 months, I feel like a lot has happened, but also in Bitcoin, everything stays the same. So the protocol is the same since 2010 with a few changes. But it's always interesting how much and how little at the same time changes in Bitcoin. How much closer would you say, when you look in the lens of gradually then suddenly, of paying in Bitcoin, as you also see a lot of data with SAP, how much closer are we to this suddenly phase when we come closer to a Bitcoin standard?
What I would say is that what I'm seeing is certainly an uptick in the number of people that are interested in Bitcoin payments, that are, we very much focus Zaprite first and foremost. The way I think about it is closest to the nucleus of Bitcoin, people for providing Bitcoin related services. Now, that by no means is limited to that, but those are the businesses that have the greatest overlap of businesses that want to accept Bitcoin as payment and customers willing to pay in Bitcoin. Because it's not just sufficient to enable the capability to accept Bitcoin, which does deliver a lot of value by providing a redundant rail, but it also has to, in our minds, drive volume. And so we focus in terms of delivering products where we think the products will solve problems for businesses that are Bitcoin centric, with the idea that the next wave of businesses that are going to want to accept Bitcoin as payment are customers of those businesses. Like, as an example, in your case with Microseed. Sorry, getting my seeds mixed up. But anybody that's buying a Microseed, right, to help back up their recovery phrase for a private key, some subset of them are business owners, and they're going to need Bitcoin payments. And so when you think about whether it's the financial services landscape of Bitcoin, the hosted Bitcoin mining space, the hardware sales, their subset of customers, if you think about expanding out from the nucleus, we focus first and foremost on the Bitcoin-centric businesses, because if we're not solving a problem for them, it's unlikely that we're going to solve a problem for further out. That those businesses are the most signal, but then it's a most efficient path to expose a great Bitcoin payments experience to the next layer of people. And what I'd say over the past year that's changed the most is that there's a greater preponderance of those people in that next layer, the people who are Bitcoiners, who understand Bitcoin, but their business is not Bitcoin centric, that are interested in accepting Bitcoin payments. It's not something like we're at escape velocity, but something has shifted, I'd say, just in terms of that level of interest. And then what I would say is we are still very much, in my mind, in this gradually phase, and that we'll know, like in my mind, there will be a rapid monetization of Bitcoin. There will be a period where a developed country currency hyperinflates, and at that point, everybody will be rushing to the exit to adopt Bitcoin, because it will be obvious that Bitcoin is the global money. The other thing, though, that I would say that inches us closer is all of the pressure the executive branch in the United States is putting on the Federal Reserve to lower interest rates. That Bitcoin is succeeding in this great contrast to that, And it is increasingly likely that this month the Fed's going to reduce interest rates despite the fact that inflation is running rampant, and that just focuses the value of Bitcoin for people. That all these Bitcoiners were out there saying this is because of the money printing. The Fed's going to have to print a lot more money, and so kind of a combination of those two things is like people don't unlearn Bitcoin. Knowledge continues to distribute. We're always getting closer to that point. And, when the Fed actually rips the Band-Aid off and starts printing trillions of dollars, more people are going to figure it out. But, certainly still in the gradual phase, but definitely in the last year, making a lot of progress towards that end.
Yeah, I'm sometimes shocked by, like, in Europe, in America, the US dollar, the euro, and many other currencies that are almost stable, kind of stable towards compared to like a Turkish lira or like an Argentine peso. I'm really shocked to see how less of a solution Bitcoin sometimes is talked about, even in those countries where when you have a currency that inflates sometimes multiple tens of percentage each month or hundreds of percent each year, at some point you have to kind of ask yourself the question, like, is that money working? and I'm shocked that those currencies are still around. And then I'm thinking, okay, they are sometimes going towards the US dollar. The US dollar is now in like over 60 or like almost 70 countries or something like that, as the main currency. This is, for me, just like, okay, what happens if this all comes from the US dollar? Like if we have no other currencies, and also the US dollar and the euro and more of the stable currencies are also completely inflating and hyperinflating, like that's then the suddenly point, like, where the trust is lost. And I get a lot more of these questions actually, which makes me kind of bullish from normal friends that aren't either deep into Bitcoin or not at all into Bitcoin, that say, I'm not sure about Bitcoin, but I'm more and more worried about the euro because I hear so much that it will collapse. And I'm like, oh, that's nice to hear that people that aren't that deep into Bitcoin or not at all in Bitcoin already now like ask the question of like, will the euro still be around? And I get that a lot from like young people under 25, under 30 that say, I'm not sure if I'm 50, 60 years old, if the euro is still around. And I'm like, me neither. But it's great to see kind of that window shifting.
It's interesting because, I think that there are experiences that are specific to each region, right? So I think it's probably like if you have a mix of European audience and maybe American audience, that people, it's interesting for me to hear something like that, where it's like they're not yet on board with Bitcoin, but it first starts with inflation, and the apparatus around the money printing, from academic economists to talking heads on media, they will look everywhere but the printing of the currency to explain away inflation. And so there's this progression of people knowing that there's inflation, that their money is degrading in purchasing power relative to real goods and services, and that they're seeing through the bullshit and they're connecting it to the currency itself. It's interesting to hear that in Europe. In the United States, it's not like people cannot grapple with the fact that the dollar might be going away. That people in America are not there yet. But then I also think that there is something about the American people that when they figure that out, they're not going to sit around and wait. That it will be a quick reaction. And so the reality is, but from my perspective, I went to a barbecue place that I've been going to for years in Texas and got brisket, and the brisket per pound was $39.50. In 2020 or 2019, it was $17.99, more than 100%. Like, I am, even though I have Bitcoin and goods and services hold their purchasing power in Bitcoin terms, it is, it still hits you every time you see just how expensive life is getting in fiat terms. And that's the currency failing. And there's nothing about raising interest rates or lowering interest rates that can mask the fact that massive amounts of money have been printed, and that's a problem for everybody.
Maybe that's interesting also in US a little bit of a difference because the US dollar might just live a lot longer than the euro. I'm not an expert in this, but I feel like the US dollar has a better chance in surviving longer than the euro.
I think that that's probably right. The only thing I would say is that, in my view, based on my like thinking about what the scenario is of like what would cause it, that if either or any of the yen, the euro, or the dollar truly hyperinflate, like they are all on the path of hyperinflation. They are not at the point where they are losing so much value on a month-to-month basis where money, functionally in a year becomes worthless, where you're having something like 10% inflation per month, every month, 100% inflation in a single year. None of them are at that, but they are on the curve toward that. Once a developed G3 euro, yen, or dollar hyperinflates, I think it's game over. That everyone around the world looks and says, the only currency that's holding its value is Bitcoin. If one of these currencies is hyperinflating, it's not just writing on the wall, it's the fait accompli, and that it domino affects everything quickly. And I don't mean quickly as in like overnight or tomorrow, but we're talking 6 month, year, 2 years, not 5.
And this is really quickly, and for me, this is what made click for me with this suddenly part. And I don't know if we talked about it last time, but as soon as I realized that money is reliant and heavily factored into trust, and very subjectively so. It was a moment where I realized if there's one crack, like one massive crack for the mainstream thinking, this could end within a very quick amount of time. And I see a lot of those like gradually charts, like we have like the Powell and all of those things. And in all of those things, I'm thinking just, once trust is lost, all those models will break. Once the trust in the US dollar or the euro or the yen, in any of those, will be lost. You cannot. Trust is very hard to gain, and very quick to lose. And trust is like, are you trusting it or not? And so, for me, it comes down to trust. When people lose the faith and the trust into a currency, which I did with the euro, that's why I'm 100% on Bitcoin. You're not going back. As you said, you don't unlearn Bitcoin.
Right. And I think that, it's one of those things where, and typically, because the dollar, or you could say the same about the euro or the yen, that if you look at countries' currencies that are hyperinflating, something like the Venezuelan bolivar or the Turkish lira or the Argentine peso, that there's a moment where you can see the confidence lost on a chart comparing currency to currency. It might strengthen for a short period of time after that initial breaking, but you will see a devaluation relative currency to currency, and then you will see an actual moment in time where confidence was lost, and there's no getting it back. The reason that there's no getting it back is because all of these currencies, fiat currencies, have no inherent monetary properties in themselves. And that's important for people to understand, because all of these fiat currencies emerged off of the back of some commodity money, whether it was silver or gold. Gold was predominant, in the case of the dollar. That the fiat currency did not just emerge organically on the market. that it was backed by gold, and then it basically was able to shift from a gold-backed system to a debt-backed system. And one of the chapters in my book where I talk about this is Bitcoin is not backed by something, and I not only describe what secures and ensures the credibility of Bitcoin's fixed supply, but also what allows fiat both to be printed and not instantaneously combust on itself, and it is this debt system. But that at the root of it, and when I say that these fiat monies have no inherent monetary properties, is that there is no physical constraint that limits their supply, that they are all easily printed. They all are the same at its core. And that because of that, it's like when confidence is lost, it's lost for a reason. That the market is figuring out that there's not credibility to the money. That is different than saying that money is a belief system. Money is certainly not a belief system. People are looking at the market and choosing one form of money or another based on what is credible and what is not. And what is credible in the context of Bitcoin is that it has a fixed supply, that it does not depend and only works because it's devoid of trust, that no one's in control of it. And when everybody is looking at options, they are looking at options of what currency is working, what currency is holding its purchasing power versus degrading in purchasing power. And the thing that actually matters is relative to goods and services, right? So it's like, hey, it's not just sufficient for Bitcoin to increase in this fiat currency that's easy to produce, easy to print, able to be, the euro, you can make a trillion euro for zero cost. You can make $1 trillion for zero cost. You can make 1 trillion yen for zero cost. They are all the same. The thing that secures Bitcoin is not random. It is not a belief system. It's not a hallucination. If it were able to be undermined, if somebody could print the money, they would print the money. That's what fiat's demonstrated. So it is this distinction of like when it's hyperinflating because confidence is lost. Confidence is lost because the money doesn't actually have monetary properties. The market has figured that out. There's no going back, and it needs an alternative. The only way to fix a broken money is with a better form of money. You can't solve your problem with the euro with a piece of real estate. You can only solve it by finding a better form of money, and that's what Bitcoin is.
Unfortunately, a lot of people use real estate as a savings technology.
Yeah.
But I'm super also shocked by, and within the last 10 months, probably a little bit before that already, we also crossed the $100,000. It was actually probably right around when we talked last time that we crossed that thing. And I was kind of expecting more, how should I say it, more retail excitement of this 100K. And I thought 2025 would be more retail excitement than it turned out to be, and it was more about institutional adoption. Is that the normal way of how Bitcoin will be adopted long run, where we have retail kind of coming in indirectly through businesses with or like third parties and having them kind of coming in as now the third layer, where like the first was kind of the plebs, kind of the cypherpunk movement, the early adopters, and now the businesses move in, and then the mainstream retail market comes in like kind of last to that?
No, I wouldn't say that. I think this is one of those areas where it might be a little bit of fooled by randomness, where it's easy to look at and see what, in terms of the flows to the ETFs are, but you don't necessarily see what the flows are to, a company like River or a company like Relay or a company like Unchained, Bitcoin companies that are providing services to buy and sell Bitcoin, custody Bitcoin directly. And then also on the other side of like the 100K, I also expected there to be like, I don't want to say euphoria, but that there would be a psychological shift when Bitcoin hit 100,000. I think what explains it is that there were a lot of people that held Bitcoin that had that same mentality of like, I just got to get to 100K, and then that unlocked a lot of selling. So that it goes both ways, and that the signal through the noise is knowledge distributing. And knowledge distributes as a function of time, and it also accelerates. And so while Bitcoin is kind of consolidated around 100 to 110K for functionally 9 months now, I think it's very healthy. But through that period, people are learning about Bitcoin. People are learning about Bitcoin partly because of the price being sustained and stable over 100,000 for this long of a period of time. People learn about Bitcoin through podcasts and reading books. People learn about Bitcoin by connecting what they learn on podcasts and books or other forums directly about Bitcoin with the fact that fiat is constantly inflating. And 9 months have passed and more humans have figured it out. And so I think that there is a reality, at least this isn't the case in the United States, but it translates everywhere, that the high interest regime of the Federal Reserve, what I mentioned before, Trump and other parts of the executive branch would not be hammering the Fed if they are not seeing the chaos underneath the surface that high interest rates have caused. It is, when I talked about the fact that, I don't know how you guys probably don't have, brisket is common over there, but it is wild to see a brisket restaurant, a barbecue restaurant charging $39.50 per pound. Like that boggles the mind. If you do not have savings, which the majority of society does not, then the high interest rate environments and the inflationary environments is destroying people. And so there's a real liquidity problem. And I'm not talking about liquidity problem from the financial market sense. I'm talking about dollars or euros in your bank account and how you're paying bills and getting by. And so the inflation is crippling people, and it's, even if Bitcoin is the solution to all of this, it's not easy for people to, who do not have savings, which we just have to recognize is the vast majority of people, because when you engineer money to lose value, do not be surprised to wake up when people have very little savings. You've conditioned them to not hold the money because the money loses value. And then they learn the painful lesson that they still need money. That just because their central banks and governments have been engineering their money to lose value over time, it doesn't magically solve the problem that money solves. And so I say that to reinforce that even if Bitcoin's a solution, whether it's retail or whatever different segment of the market and how it's getting there, that it's an uphill battle for a lot of people to be able to put away more savings than they're spending, because everything is working against them. And so what I see is, it's like, it is still true that it's going to be easier for the individual to adopt Bitcoin or a small business to adopt Bitcoin, because if you accept that no more than 1 out of 100 people really get Bitcoin, I'm talking get it, like not having some small exposure in a trading account, but like seeing the field that the problem is printing money, that fiat's easy to create, and that it's not crypto, it's not blockchain, it's just Bitcoin, that you don't need more than one money to solve your problem. The universe of people that get that is 1 in 100. If you then think about a board of a large company, some of these large companies have boards that are 10 people, but think about a board that has 7 people or even 5. You would have to get 3 out of 5 people on a board. You'd have to get 60% of people to have a majority of a 5-person board. If 1 in 100 people get Bitcoin, it is unlikely that the leaders in this are going to be the largest of the large institutions. It is easier for one individual, understanding Bitcoin is an individual experience. You got to add up a group of individuals. So nothing changes that dynamic. And that the the most important thing is that small business owners figure out Bitcoin. They're also the ones that are most capable of making a decision because they're tightly held. They're owned by one person or one or two people. They can spend the time to understand Bitcoin and then turn the lights on. So I think that that's the true signal, and that it's just logically going to be driven. Like even if it's an individual buying it through an ETF, it's still an individual. And there's a rational reason why the individual and the small and medium businesses are going to lead the way, because Bitcoin's hard to understand. It's hard to see, and it's hard to get a consensus of a large group of people. And it's easier for an individual to act in their own self-interest.
I do love the watches from Coin Vigilante, but today I have a very special message, not from me, but from the CEO himself, Carlos from Coin Vigilante. Let's hear him.
To all the Robin Seyr podcast community, I'm Carlos Estrada from Coin Vigilante, and we're sponsors of the show, and we're going to give you a very special discount exclusive to you. 10% off your order at coinvigilante.com when you use Robin at checkout. We have really nice watches that you guys can buy right now for 10%. This is a transparency edition, beautiful watch. These watches are worn in over 55 countries and counting. This discount is just for you, exclusive to the Robin Seyr podcast. We have limited editions. We have limited productions. These watches come in very nice packaging, boxing material, and they are collector's item for Bitcoiners only. Enjoy the discount. Thanks for supporting the show and Coin Vigilante.
I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC-free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. And I think that this kind of gets lost sometimes because even ETFs are considered institutional, but like those are mostly also individuals buying through the ETF, the IBIT, for example. Like even with strategy, there are a lot of people that individually go into strategy as a stock and buy strategy, and then with that money, kind of strategy can buy Bitcoin. Obviously, not like as with the ETF, but even behind a lot of the institutional adoption is also individual adoption, and they are also getting educated. I love that you brought this up, where it's education over time, and that education is the important thing, and not so much like the price action or like who's buying what. So like the education is the foundational thing. If we can educate the world on what Bitcoin is and what money is, like Bitcoin has won. Like there's no way around that.
Right. And you think about somebody who has very little savings, who walks into a grocery store and sees that their food is more expensive and that their wages are not keeping up. And then recognize that that person has no understanding of Bitcoin. That person is not connecting the inflation and the problem that is created by it for their lives to Bitcoin. They need some primary knowledge of Bitcoin. They need some knowledge of what problem it's intending to solve and how it works, to have their own conception that it is credible and not just a hallucination and not just a belief system, that there is substance to how it works, and that if it were possible to undermine, then it wouldn't work. To then connect when they walk into the grocery store and there's inflation, that Bitcoin is the solution to it. It's not possible without it. There will be a time, and this is where it gets to the suddenly part, where it's obvious because Bitcoin's the only currency that's working. And in that moment, it's going to be a simple A/B test. Which one do I choose? We're not there yet, but the only way that we get there is by enough people individually coming to the conclusion in a very rational way, and that's dependent on education.
What do you see as the final boss for Bitcoin, like the final thing that kind of Bitcoin has to get over to get to this suddenly phase? Is it just time and the failing of fiat currency, or is there something that also has to happen within the Bitcoin community?
I think that it's principally time, because time is what is required for knowledge to distribute. Right? Like, it's not just time for time itself, but it's time listening to podcasts, time reading books, time connecting what people learn on podcast, books, or going to in-person Bitcoin events to what's happening in the fiat world and connecting those dots. What I would say is, and that's the most important thing, that today in this world, like, Bitcoin is very hard to see and understand, but people still have to make that conscious decision, and that conscious decision is based on the acquisition, in my mind, of primary knowledge. So to this point in time, I would say that 99% of the people who have come to understand Bitcoin have come to understand it in that way. In my view, part of what really is required is that at the end of the day, in my mind, even if 99% of people who have come to understand Bitcoin to this point in time they have to have some level of vision, of seeing the future, of connecting these dots and recognizing, even though Bitcoin trades on a screen like it's a financial instrument, that it's money, and that where we are going in the future is everything being priced in Bitcoin and purchased with Bitcoin, and that in that future, Bitcoin's perfectly stable, and it's the thing that prices all other goods, and it's the thing that you need to buy things like food and gas at the gas station and access to medical care. It requires vision to see that. It's hard to see. 90% of people will probably come to understand Bitcoin because they're seeing it used as money. That one of the things that makes it hard to understand is if somebody is tracking all of these reasons why Bitcoin makes sense as money, the fixed supply, the fact that it can't be undermined, but then they zoom out and they say, but I can't buy anything with it. When people start to see that you can buy food at the grocery store or gas at the gas station with Bitcoin, that is going to be an education to a large majority of people that could otherwise not understand how Bitcoin could evolve from its current state to a future where they can actually use it to buy things in the real world. Because that is the function of money. We're not here to just accumulate digital wealth and stare at our computers. That the end game is the money is there as a tool to serve a purpose, and it's to coordinate trade, and the purpose of that is to get real goods and services to market. And it's dependent at scale on money. And so as an individual figures it out, and then that individual is a business owner, and they make the forward judgment to say, and I'm going to accept this at my business, that in my mind is path dependent, because it's part of the educational process. It's the real world application that becomes then easier, like functionally easier for the majority of people to understand where the future is going.
And this is an extremely important point, because as people get educated on Bitcoin and as they start businesses or they have businesses, they're like, hey, I anyways have Bitcoin. And that's why I also shifted in my podcast. With all the partners that I now have, I do accept only Bitcoin. And this is just 11 days ago that I've made that switch, with the last partner also towards Bitcoin and not Fiat. And this is extremely, like the more people that switch, there's this theory around, I don't know if you've heard about it, that if 4% of the population distributed across all demographics are intolerant about what they spend money on, so they want to earn Bitcoin and they want to spend only in Bitcoin, and they're kind of intolerant on that this kind of forces the whole market to shift towards having Bitcoin everywhere and having Bitcoin payments everywhere and having that. Have you heard about that 4%? I think Jeff Proof also talks about it.
I don't know about the percentage, but I am familiar with the idea of the minority rule. I don't know if it was an idea created but I think it was popularized by Nassim Taleb. In one of the chapters of my book, Gradual and Suddenly, the chapter on Bitcoin cannot be copied, I talk about the minority rule, and where it's this reality that if there's a market, and if everyone in the market is willing to accept currency A, and there's an intolerant minority that says, I'll accept A, but I also want B, and that B is the real money, that the intolerant minority can drive the majority to them through their intolerance. And there's other explanations, and Nassim Taleb talks about a number of those, where it's that the preferences show strong, but it's also strong for a reason. It's strong because there's a fundamental signal. It's not just if they clench hard enough, like there's a reason why it's driving them to that position of intolerance. And in this case, because it's the better form of money, and that it doesn't need to be a large swath of the population. Another way that I contextualize it is that once 1 in 10 or even maybe 1 in 20 of a population sees Bitcoin, that it is likely that those people are the people that have the greatest access to knowledge and the greatest amount of value to store. And that once 1 in 20 have figured it out, or somewhere between 1 in 20, which would be 5%, which would be around that 4%, that it's functionally easier for the rest of the world to come along, because those 4 to 5% combination have the greatest wealth in the world, as well as the business interests that are delivering value and goods and services to the rest, to everybody else. And so it's not something like 50% of the world need to figure this out to bring the rest along, that it is more likely, if you looked around and 1 out of every 10 people got it, then it's functionally easier for for the other 9 to say, like, this isn't some collective hallucination. This isn't just a belief system. Something fundamental is happening.
Yeah, that's really interesting. That a kind of minority can drive mainstream kind of thing. It's funny because we talked about you cannot unlearn Bitcoin, and Nassim Taleb seems to be one of the few examples that kind of the exception proves the point.
What I would say is that there was always a tell that Nassim Taleb never understood it. Right? There are people who might understand that there's some signal without knowing what the signal is. And unless you've truly understood the root, you're always susceptible to, I don't want to say unlearning, but to if you haven't found the right signal, then to deviate. And so in Nassim Taleb's case, he wrote the foreword of the Bitcoin Standard, and there was a line towards the end of that said something along the lines, even if Bitcoin fails, we now know how it works. If you really understand Bitcoin, you understand the fallacy, because if Bitcoin fails, it means the credibility of the function that ensures that its fixed supply cannot be undermined did not work. And if it did not work, it can't work. And so in that world, what that communicated to me was he hadn't actually figured out how Bitcoin enforces its fixed supply, which is the greatest signal underlying everything. If you do not have some conception of why Bitcoin's fixed supply is not random and why it can't be undermined, and as it grows, why it becomes more and more credible and more secure, then you are ultimately at risk of going the way the wind blows. That you don't have an anchor in your thought process. And so it is possible for someone to have developed conviction around that, and then to see a true signal that causes them to question it. That's perfectly rational. In Nassim Taleb's case, that just was not true. That, he saw Bitcoin go up, he thought he understood it, he didn't, and then he'll get Bitcoin at the price that he truly deserves.
Yeah, and it's even his case is very rare where someone comes out publicly and is for Bitcoin and goes back and is then against Bitcoin. It's a very rare cases, and in all of those cases you could make the argument that they haven't really understood it or haven't really done it. Jim Cramer is one of the ones that probably go the most often for and against Bitcoin, as depending on how the market currently does.
Right, because another signal, just to touch on it, but like one of the other things that Nassim Taleb said when he basically was saying Bitcoin doesn't work is saying that it can't be money because it's volatile, and it was always volatile, right? And so you have to recognize that's like, well, what changed? It was volatile when you seemingly communicated your interest in it, and it was still volatile when you said that it can't work because it's volatile. And that one of the principal things that people have to understand in order to arrive at the conclusion that Bitcoin is money is that Bitcoin is path dependent on its volatility. If only 1% of the population understands Bitcoin, I'm generous if I was to say 1%, then 90% of its supply is already in circulation. For the entire world, say if Bitcoin, goes from 1% of people understanding it to 10%, that means that 9 out of every 10 people in the world is pricing an asset for the first time. And their knowledge is necessarily limited the first time that they acquire Bitcoin, because acquiring Bitcoin and holding it is part and parcel to an understanding of Bitcoin. Sending a Bitcoin transaction. Again, not everybody has to have a hardware wallet, but sending a Bitcoin transaction, using it as money, that's part of the education. And so it's not possible. There's a great quote from Vijay Boyapati. I include it in my book. Vijay's written a great book called The Bullish Case for Bitcoin that basically articulates for people that it's ludicrous from something to go from nothing to a fully functioning form of money without volatility. That what that volatility represents is price discovery. The first time that you're acquiring Bitcoin, your knowledge is necessarily limited. You understand it as a function of time, interacting with Bitcoin directly, holding it, using it, and if Bitcoin supply cannot adjust as 10 times the number of people buy it for the first time, it can't not be volatile. It will only not be volatile when the amount of incremental demand could only represent a fraction of the base demand. That can only happen when a lot more people own Bitcoin.
Yeah, and I think it's such a great point that you bring up, and such a great point from him also, because I always bring that up when people from my environment ask me what about the volatility, and I always say that what you also just said, like we have the biggest financial revolution ever. We're having a new form of money that currently is getting spawned into the world, and we're just in the first inning of that, and 99.99% of people probably haven't really figured it out what Bitcoin actually is, and they're figuring it out right now. And this is called price discovery. This is called educating on Bitcoin. This is called like all of those things. And then of course you have supply and demand. The demand is quite stable, and the price obviously will fluctuate.
Right, and also to connect for people that there was a part of what I mentioned, which is that imagine there's a universe of people that own Bitcoin and understand it, and that the current amount of new Bitcoin being created is about 0.8% a year or less than that. That if 9 times the number of people want to own Bitcoin, they've got to buy it from the people that already have it. And if people understand Bitcoin, that they're not going to be very willing to sell Bitcoin, that you're going to have to bid it away from them. You're going to have to pay a higher price if you want to unlock supply from the people that currently own it and understand it. And so, just thinking about the world, it's like if demand increases by 10 times, but supply only increases by 0.8%, we're talking about 100 times versus 1%. The only way forward is higher in that world, and volatile.
Very good. I have one more topic that I want to get into with you. Kind of the moral case for Bitcoin, and the world that is what when there's no more fiat, and what if the Bitcoin when Bitcoin is successful. How are you explaining like the ethical or the moral case for Bitcoin completely outside of the financial one?
Sure. Well, one, I would say the only reason that Bitcoin works is because it's removed the need for trust in any other humans. That if it were possible to undermine, and in my view, the principal path to undermine it would be to undermine its fixed supply. If that were possible, then Bitcoin doesn't work. And that recognizing that if somebody had the ability to create money out of thin air arbitrarily, they would. And if somebody had the ability to create Bitcoin arbitrarily or in a way that's inconsistent with its fixed supply, they would. And so that in that respect, it's not dependent on people doing the right thing or not. That everyone is going to need to demand Bitcoin because they actually need money to fulfill very basic needs and wants in their lives. Getting things like food, getting things like access to reliable power, getting things like access to healthcare. That money is a necessary part of the equation, and also good money that somebody else can't create easily, arbitrarily. But then beyond that, to your question of there is a what I would say a moral side of each individual, right? That is, in a world where money can't be printed, it is an honest scorecard. And if you've accumulated savings in money and in real capital representing the infrastructure that's necessary to deliver goods and services to the market and the knowledge that's required to do that, then with an honest scorecard, which is a form of money that can't be printed, any amount of savings represents the net of what you've produced for others versus what you've consumed from them. And that there is a side of it, which is that like there's something noble and moral about being minded to deliver more value to others than you consume from them. And that oftentimes there's a saying that money is the root of all evil. And I would more frame it as the printing of money, the undermining, because in the world where you're consuming more from others than you're delivering to them, that is the disincentive that ultimately causes a civil society to devolve. And Bitcoin creates an incentive both to align a self-interest to have savings and to better your own life, but inherently is wed to this idea that you only get those savings if you deliver more to other people than you consume from them. And it's this perfect, in my mind, not perfect, nothing's perfect, but it harmonizes those two things. It harmonizes the self-interest with the interest of others. And as people figure that out, that genuinely in Bitcoin, like there's a difference in making money and delivering value. But once you have a form of money that can't be printed and you have a way to credibly save, then in a way that your central bank or the government doesn't undermine or can't undermine, you can actually in that world spend more of your time thinking about creating value, finding the things that overlap between what your own interests are, of how you want to deliver value, with a medium that allows you to do that in a sustainable way. And that once you get to that point where you have enough savings where you're not focused on how you're going to pay bills in the next month or even the next several months, maybe a year, then you can sit back, the monkey's lifted off your shoulder, and you can say, okay, what do I actually want to be doing with my time? And in that world, you genuinely worry less about money and you think more about your time and delivering value to others. And so that is what I would consider the moral side of Bitcoin. And that it pulls like a gravitational force more people into that mindset.
This is so well explained. I like that a lot. And I don't want to even add something because this was always very, very good. I have one question to ask each and every one of my returning guests on the podcast. And the question is, what have you learned outside of Bitcoin since your last appearance?
Well, I've learned a lot, because if our last podcast was about 10 months ago, that I've got a child that's about 10 months old. So as a first-time parent, there's been a lot that I've learned about raising a child, and that ultimately also all the time that I spend working in a way is, for, ultimately providing for my family. And so that time is scarce, and that, people both need a sense of purpose as well as to functionally be more mindful to how they spend their time. And so, like tangibly learn more about, raising a kid and how important that is, and that it's incredibly rewarding, because there's a lot of things you learn as a first-time parent, but then also, it shifts the mindset of that you need to be more judicious about your time.
And I think this is also one of the reasons, because I'm actually fascinated by those studies that show, because of the one side, a child costs a lot of money, but then there's a lot of studies that show that a married couple with one or two or more kids has more money and better income than a married couple without them. And a single person has less income capabilities than someone that is married. So the statistics is very clear on like who are the ones that have more income and more financial power. And I think it's one of the time aspects that learn it.
Yeah. I think there's something real to that, which is, it focuses you. Like you have to be more focused in that world, and you think about the future differently too.
Absolutely. I have one more question. This is the end routine question, where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question, what is the most annoying take that a lot of Bitcoiners currently have?
What is the most annoying take that Bitcoiners currently have? One thing I would say is that there was some outcry about Jack Dorsey. Jack Dorsey had a comment that was that Bitcoin needs to be used for everyday payments to work. And there were people that said, it doesn't, it's a store of value and it can just be a store of value. And I think that a lot of people missed the substance of what he mentioned, that it wasn't that everyone needs to be spending their Bitcoin today, but that the end game is that Bitcoin has to work for day-to-day payments or else it doesn't work in the end. And that the way that I would frame that, which I agree with, is that if Bitcoin were only, it's that Bitcoin is only able to store value because it's easily exchangeable. The goods that emerge on the market as money do so because they have certain properties like relative scarcity, but that a lot of things are scarce in the world, and that the goods that emerge as money do so because they're easily exchangeable. If it were the case that Bitcoin were only exchangeable for fiat, that would be a world that would only exist because of fiat, not the fiat currencies, but because there was some rule or edict or law that said you couldn't use Bitcoin as money directly in payments and directly to buy goods and services, and that you had to go through the fiat system and the fiat currency in order to access the real goods and services in the real economy. And in that world, that would signal that Bitcoin is centralized, and because from a technological perspective, it's perfectly capable of facilitating payments, and that capability will grow as infrastructure is built. And so that's what I would say is the most annoying case. It's like it's missing the signal. It's not saying everybody has to spend their Bitcoin today. There's no moral imperative to go spend your Bitcoin, but also recognizing at the same time that there's no way to split a money's ability to store value with its ability to be exchanged. That the medium of exchange and the store of value are one and the same, and that the future end state of Bitcoin is as a currency that's facilitating all the world's commerce day to day, and that the consequence of that not being the end game is that Bitcoin was too centralized to be able to get to that point, and that's the scenario in which Bitcoin fails.
I love that. And like just one small comment on that. I get sometimes the comment, especially when we talk about medium exchange, like, oh, Bitcoin can never be a medium exchange. And I'm like always, I already use it as such.
Yeah.
So to a certain extent, it already works. And it already is one, of course, not mainstream, but it already shows that it kind of works, and it's usually better than the fiat system, especially if you want to pay someone from Austria to Colombia. Man, it's a hustle with fiat, and it's really good with Bitcoin and very easy also.
Yeah, absolutely. There's recognition that for a lot of and especially people that have a lot of Bitcoin and little fiat, like it's easier. Like if you have to go back into the fiat system, there's more friction. And then also particularly like you mentioned for cross-border or just for large payments, that there's a lot of friction to sending large amounts of fiat around the system, but also certainly across borders.
Pretty cool. Thank you so much, Parker, for being on. Before I let you go, where can people find you, Zaprite, and all the things that you're doing?
So Zaprite. So what I would say is, I always try to reinforce this for people, which is that if somebody does not yet understand Bitcoin and why it stores value, the logical thing is not to accept Bitcoin as payment. It is to continue to acquire primary knowledge, listen to podcasts, read books. My book, Gradual and Suddenly, is a great resource. It's on Safety Namus's website, the author of the Bitcoin Standard. So certainly get the Bitcoin Standard as well. Check out my book, Gradual and Suddenly. The website there is thesafehouse.com. So safe is spelled SAIF, thesafehouse.com. There are other great books about Bitcoin. Lynn Alden's book, Broken Money, Ricardo Salinas. Safe has other books. Matthew Leshak has a book on fiat food. So continue to educate yourself. But then for those individuals that already do understand Bitcoin, I would encourage them, if they run a business or if they are a key person in a business, that they seriously consider accepting Bitcoin as payment for their businesses, that it will de-risk their business, it will benefit their business. And if they're interested in that they can check us out at zaprite.com, ZAPRITE, zaprite.com. So check us out there. And then I'm also on X, Parker A. Lewis. And then separate from that, I've got, if people are interested, if they're down the Bitcoin rabbit hole and they want to go down the energy rabbit hole of Bitcoin, over the last couple of months, I've started to release once a week an episode on the TFTC platform, Marty Bent's platform, that is specifically geared towards the convergence of Bitcoin, energy, and the mining side of Bitcoin. That podcast is called Center of Hash, and so they can find those episodes in the TFTC feed on any podcasting platform, and those episodes are marked with the red TFTC logo. So if you want to go down the energy rabbit hole of Bitcoin, check out the podcast. Payments, zaprite.com, and my book, Gradual and Suddenly, or other Bitcoin books on thesafehouse.com.
Awesome. Thank you so much, Parker, for being on. And also, thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye. This content is for educational and entertainment purposes only and does not constitute financial advice.